So welcome guys, welcome to FMS Capital and to another brand new video. Um, this video was requested by someone, so I thought of dropping it, and we'll dive to look at what COT means and how helpful COT could be for you. So if for anyone who doesn't know what COT is, it's commitment of traders. So basically these are participants that move the markets in different ways. I know for most people that are up to date with what trading is all about, I know you have heard about COT. But today I want to diverge a little bit more in depth about it. And I think this video could help you, especially in your technicals. And yeah, so in COT, we have commercial traders. Also, we have non-commercial traders and non-reportable traders. So non-reportable traders are you and me. And basically, our positions are not that big to be reported. Commercials are traders. These are producers. Let's say, for example, gold. Let's say a company that mines gold. So that basically is a producer. So basically, these guys also have a way of managing their funds. And basically, for them, it's basically they are trying to be in the business of hedging their risks. So they are not in that business of being profitable. After all, if a gold company that mines gold will always just want to hedge on the risks. So we have also non-commercial traders. So these are guys who I call them smart money. And these are the guys who will try one to follow them for the most part. And inside non-commercial, there are also different players now inside them. We'll go and see who are they. We'll diverge about dollar, GBP, Audi, I think yen, and probably euro. And so let's scroll down. So you can see we also have on this side, so these are the guys I'm saying on the non-commercials. So basically we have dealers, asset managers, leverage funds, and other reportables. But basically the main purpose is I like looking at these guys. So asset managers are like insurance companies and pension funds. So these guys like to be in the business of profiting. And you'll find that these guys are really smart guys. So if you try to follow them, you can probably have a clue on the technicals. And so I want to go to the charts. And now here is going to be kind of technical. So if you're a beginner, this video might not help you that much. But I think if you are someone who likes to dig in and research about markets, by now I think once you get this video, probably then you go and research and see what it's all about. And so I like using bar chart. So this is bar chart. So this is bar chart, and I'm looking at the futures. This is the futures of the dollar, and we'll try to see what the dollar has been doing for the most part and what I'm predicting. And if you're not familiar with bar charts, I'll try to be quick on it. So basically, there's COT. These lines are COT. The green people are basically non-commercials. They are now I have split them to asset managers. So these guys with TFTR are the asset managers. This is the total non-commercials I'm looking at. and this is open interest. For those who have been studying ICT, I believe we are at par at what we are doing, because I also use ICT concepts, but to a point, it reached a point whereby I needed to know about a lot of fundamentals. And so there's a lot of fundamentals you could be using. And once you get to know about it, I think it helps on your technicals, especially now if you're trying to swing and all that. So yeah, so open interest. So if you look closely, like I said, asset managers are guys who are in the business of profiting. So if you look and compare with the person looking at the technicals only, you can see that, for example, this is 2024. I think this was around July, if I'm not wrong. So there was positions that were being sold. So they were net short for the most part, net short. If you look closely and go above and look at what dollar had been doing at that time, it goes in tandem with it. And if we switch again, compare the above area and the TFTR, the asset managers, still, it's still going the same way. So I like looking at these guys. So every week when they report their positions, because for us now, retailers, these positions, we get them on Friday. So it's delayed, but it gives you a sort of insight to understand. So currently, we'll go to currently what I'm looking at. So I'm thinking of dollar will be strengthening, especially because now the asset managers were really net short. For the most part, since I think the beginning of 2025, a lot of net shorts have been increased. And so what I'm thinking now is probably because now, like I said, COT has a lot. So now here I'm going so technical on it. So like I said, they have been net short. And so what I'm seeing now is anytime you see them at 3-year or 2-year extremes, sometimes even 1-year extremes, there's a possibility of reversals. And if we look back, and this is where probably Michael talks about IPTA, but now see this is something we are looking back 3 years back. So if we look at the end of 2022, was around here. If you look at the end of 2023, I think was around here. And if you look at the end of 2024, was around here. So notice that we had lows, extreme lows at certain times. So when I see price looking back, and we are probably 2-year extremes, or probably sometimes even 3 years extremes. I think even sometimes a 1-year extreme. I always associate it with probably reversals could be happening. So that takes me back to now open interest. So anytime like right now, I can see we are probably at 2-year extremes, especially even this is way back. So these are probably 3-year extremes. And when I look at the open interest, it has been declining for the most part, thanks to ICT of showing us about this open interest stuff. So what I'm thinking is probably dollar gains. So this could result to us buying. And for the most part, if you look at around this area, we focus around this area. And for this week, because we got the report on around this weekend, so Friday, Saturday. So if you look at this, there's some net longs probably have been increased. And this could be probably now a mover for us to probably continue buying. So if we go back to now the charts, the candlesticks, Here's where if someone doesn't know about COT, it becomes tricky for them. And I believe fundamentals and technicals, you really need to know both of them. So if you go to the technicals, bear with mind that I'm trying to draw this line. So I want to go to trading view. I just want to stick with this chart so we can correlate with the COTs. So if you look at this, what I'm thinking is probably we're probably buying, and my focus area could be this area. So in short, that could, let me rub this area. So in short, that could probably go in tandem with the asset managers moving to at least cover this range 50% area. So that's what I'm looking for on this, on the technicals, candlesticks, and looking at them probably increasing their net longs. And the reason also, if you look at what Powell said, I think was last week or probably this week, Powell is not in a hurry to cut rates. So, and the last rates, if I remember, it remained unchanged. And so I think they're in a situation whereby they need to look at what Trump is doing and the policies that he's doing on the tariffs. So they are taking a precaution on it. So that's what I'm thinking probably can still fuel at least dollar buys to premium. Then we'll assess again what they are trying to do, what Powell is saying. And for those who like to look at divergence, so sorry about that. So for those who like to look at divergence, if you note these two, so these are the total non-commercials. So asset managers are still inside here because there are 4 players around here. So that's their total number. But now I've split it to specifically understand what specifically the asset managers are doing. So these two, if you look, they are lows. We have a SMT on it. And if we correlate back to the technicals on the candlestick, I hadn't drawn here, but if you look at that area, so these guys have still not yet tried to hit that low. So what I'm thinking is that an open interest is declining sharply. So what I'm thinking is probably now the buys and probably open interest probably could kind of gradually start rising. So to indicate a healthy trend. And yeah, so that's what I'm seeing on dollar. So dollar will be my favorite pair for the most part. It has been, especially for the last, I think, 3 weeks, because I was waiting and waiting. So remember, when you have these biases on COT, so what you always just try to do is now buy at discounted areas. Could be a H4 area, could be a daily discounted area. So those trades will gonna be very, very smooth. Um, also observing the power of 3, so buying below the open of US Open, if you're using US Open. So it will be very, very smooth, and you'll understand there are days that you'll probably want to avoid so that it aligns with the bias, or you're looking at COT, and especially always associated with the bigger trades, like the bigger news, sorry, like COT, CPI, NFP, what else? Fed fund, or Powell speaking on the Fed fund rates. So those days you probably want to trade after the news and assess. And then probably now you can be able to try and want to swing. But nevertheless, I want to keep this video a little bit short. So we'll go to what British pound is doing. So this is GBP futures, and currently what I'm thinking, we'll go first to the technicals. So what I'm thinking is probably we'll be coming to this OB eventually. Not sure if we are gonna dip up to here, but interestingly, above this is our asset managers. So follow FTR, means asset managers. You'll find my other charts probably FTR are in the middle part. So notice these are the asset managers. So these are the total non-commercials. So if you notice also, we probably took these lines. I'm thinking this could be an SMT. And for the most part this week, because now we have the results of what their positions are. So I've seen some increase of net longs, sorry, net shorts. So that's fueling me to see to see GBP kind of become bearish for some time. Probably this May or this Q2. On the open interest, there's nothing much. However, maybe let's say if we look it on the basis of 3 months, so we can focus on the open interest and what it has been doing. So I think nothing much. Actually, it has just been reducing a little bit. So could signify that the top that it has been printing. So basically, the consolidation could be telling us it's weakening for us to probably sell. And by that time, probably if open interest starts rising, that could really help us know that we are really bearish. Because Michael talks about also when price is bearish, open interest can be rising. So take note of that. And let's go to Australian futures. Especially Australian futures, I'm seeing it to be very weak. Currently, FTR, remember asset managers, we are at near 1 year extremes if I'm looking at it. But let's look at 3 years. So if you want 3 years, probably at 3 extremes. Yeah. So if you were to draw a line all the way from way back, you'll see we are at near. These are 3 year extremes, sorry, 2 years extremes. So, and asset managers increase their net longs, sorry, net shorts again. I think this is for the third week they have increased their net shorts. So I believe Audi is really weak in combination of COT, divergence, SMT. The total never took out their low. Also in combination of open interest declining. So it signified probably this is a topping we are having of a buy side. So at least for us to get to a discounted area, then we'll reassess again. And yes, we'll go to the other. So yen. So we'll go to yen also and look at it. So yen has been really interesting. If you look at yen, for the most part has been a whole 2 years probably has been in a very bullish scenario. And you can see from this low represent this low on the total non-commercials, still represent this low on the asset managers. So they had the buys, which were these buys, sells, were these sells. Buys overall is this buys. See, you can see that this is like a map road that gives you a clue of what the bigger players are doing. But anyway, so if you look at JPY, we are at really, really extremes of, this was the high of 2024. 2023 highs, I think, was here somewhere there. You can see like we are so way above. So that means if and especially now, because I think yen is in trouble, their country is pretty bad economically. So I'm thinking yen could be weakening for some time, at least for us to get to good areas. And especially now, you see asset managers have increased their, if you look at this line around there, they have increased their net shorts for the most part. I'm also looking at open interest has declined a little bit. So this could be a topping on the technicals. Also, if you look, this high represents this high, but you never took it out. Sorry about that, but you never took it out. And this other side is this way. This other side is this way. You see, so this could be an SMT that is happening. But nevertheless, yeah, so I'm looking for bearish dollar, JPY, Japan. And so remember you have gone analyzed 4 pairs, and yeah, dollar being bullish, British pound being bearish, Australian being bearish, yen being bearish. So it will be easier for you now to trade something like USD JPY or GBP USD, Audi USD. You see, if both were signaling for me buys, let's say dollar is signaling me buys and GBP also is signaling me buys, I'll probably avoid that pair because I want something that is opposite of each other, and it becomes easier for me now to pair when you're reading now GBP USD. And yeah, so for this, I'm looking at sales on yen. We'll go to New Zealand USD. So New Zealand USD, yes, what I'm seeing, we are still even not in the extreme highs of, I think, for the past 2 years. But nevertheless, what I'm seeing, the asset managers have switched their net longs to a minor net short. So this is probably signifying me probably this could be just us covering this range, high and low, then 50% area around there. So this could signify probably some net shorts could be forming. Same as on the technicals, looking for at least sells back to discounted areas of this, probably then buys, maybe. But that is, we'll need to assess again. Because for some time I've been buying New Zealand USD, especially when they started switching around this area. So I was sticking to that bias. Total non-commercials also have minor decreased. You can see open interest is decreasing still. So this could, for me, is signifying probably the weakening of the buys and now the shorts coming in, or probably retracements back to discounted areas here, around somewhere here. So for me, I think New Zealand is bearish. So if I was pairing this and probably trading, let's say New Zealand USD, it will be easier for me to sell so that I can be buying dollar. And so we have euro. So now euro is also something else we need to check, and that's why I've put it as the last one, because now I want us to go to what it's printing out. And the reason for this I'm looking for is, if you look at asset managers and we look at probably 1 year extremes, so this could be a 1 year extreme high, 2 years extreme could be this high. So this is 2 years extreme. So I don't think euro is that bearish, if I was per se to say, because they are not still at bigger extremes, but we can note that they're approaching the 1 year extreme area. And there's resilience of not any single net shorts being placed, because even this week I'm looking at the total non-commercials increased. Also asset managers increased. So this is the one that I'm laying down with. So I wouldn't probably be trading, because if it's bullish, at least a little bit bullish before probably tanking, at least I would want to see net shorts being positioned, especially on the asset managers. If I see SMT divergence, the better between the two people. If I see open interest declining, the better, you see, because currently it's not declining. It shows me that it's probably still in a healthy trend, the upside for some time. At least if I see sharp declines, then would signal me something. Nevertheless, yeah, so I think we'll stop there. And I hope this video is going to impact something. And believe, just go study hard. And I think this will help you. There's also something about ETF flows. Go look at it. And yeah, so may you guys have a lovely weekend. See you in the next episode.